Your views on the markets. We're seeing, some modest gains on the part of the NSE, but, we're still very far from where the year ended in 2010.
True to that. We are in a small phase of a mini bull run, if you'd like to term it that way, which may last for a week or 2 weeks, although, but the general trend is still bearish if you look at where the market is and if you look at the extent the market is going up. If you look at the NASI instead of the NSE, and NASI, which is more representative of the whole market, it's edging up, but edging up very slowly and with very small margins. So basically, when you see the NSE 20 going up with larger margins, it's just because foreigners are more prone to the blue chip counters. And the last 1 week, 2 weeks, we have been seeing heightened foreign activity on a couple of counters.
Talking about the blue chips, the one that seems to be quite consistent in terms of attracting investors and moving some shares is KCB. Obviously, some good results that came through this week, but they've also got some pretty aggressive expansion plans for the region. Can you talk us through the fundamentals of the bank?
Yes. In terms of generating income, if you look at the banking sector as a whole, currently, you find most banks will continue giving you double-digit profits. This is basically mainly because the rate that they're lending out money at has jumped out faster than the rate they're paying on deposits. The margin has ridiculously widened over time. And you now look at the banks that have the largest deposits and the largest loan book, the banks that will benefit faster than the banks that are now going to try and sell out loans. So you find your banks like KCB will benefit from that move. In terms of regional footprint, most banks are trying to go regional, but KCB kind of already has a seamless regional footprint that is already there, which they're now beginning to just leverage on and make money on. And they've basically broken even on most of their regional operations, and it's now bringing in money inside. And with the weak shilling, the revenues are reported in dollars, converted to Kenya shillings, to boost your balance sheet.
One of the biggest problems with the top-tier banks like KCB and Equity, even Cooperative Bank, was the trading multiples and the fact that, you were coming into that stock at a fairly expensive rate above 10. Are these fundamentals enough to sort of say to investors, it's still an expensive counter, but it's worth your money?
Yes, when you look at the fundamentals, the first fundamental that you normally look at is your earnings per share. How much am I earning for holding this share at the end of the day? So you'll find when it comes to the banking sector, actually, the counters that have good earnings per share is KCB and Standard Chartered. So that's why you'll find they will attract more foreign investors into them, because an investor is looking at, if I'm holding this share, what am I earning on it? When you move away from your earnings per share, you go next to your dividend yield, which are the banking sector stock, apart from Standard Chartered and KCB, pays you a high dividend yield. So you find a high EPS and a high dividend yield, but the PE becomes a bit not that relevant, because they're thinking, yes, I'm getting inexpensive, but there's no other comparative stock that is paying me higher per share in terms of dividend and in terms of earnings.
Other stocks to look out for, Kenyan obviously coming through with their results and a lot better than expected because of the rains coming through. But is that enough? Because we have seen, tariffs rising, inflation rising, costs basically rising in terms of production.
Utilities are normally a good bet. They're actually the best bet when the economy is not doing well. Unfortunately, sometimes Nairobi Stock Exchange has a brain of its own, but naturally we expect utility stocks to be defensive stocks. Those are the stocks you should actually be running to when the economy is not doing well. Because people will not switch off electricity because the economy is not doing well. People will still use electricity and anything that is in the utilities. What we really need to look out for is the manufacturing companies' results, which will give us a more precise picture on what is actually happening in the economy. The banking sector will give you good results because of the huge margins, but the manufacturing sector is bearing the brunt of the inflation, the interest rates, and the currency. So those results will give us a precise picture of where the economy is and how we'll end the year on the NSE.
Okay, we've got 30 seconds. Your outlook for the shilling?
It will remain range bound, 100, 102, 103. Basically, I don't know how long the central bank will sell undisclosed amounts of US dollars to try and show up the shilling, considering the reserves are going lower. So we'll remain above 100 99, 100, 102. I hope I've taken 30 seconds.